Hey guys, in our last video on golf courses and country clubs, we talked about liability insurance, right, and how that affects, right, your business and the course. Today we're going to talk about something even more expensive, property, your equipment, that high dollar stuff, and how it can affect your business and the course. How not having those things up and running and operating can literally stop the course or the club from running on a day-to-day basis. How you don't have a course. So we're going to break it all down here in today's video about how property damage works, the coverages, the limits, what you need, what you don't need, why it's important. So let's talk about examples and why we're talking about this. So storms, lightning hits your clubhouse, lightning hits it, fire spreads, clubhouse is on fire, $200,000 in damage later. You reach out to your insurance carrier, your adjuster says, hey, sorry, your policy only covers actual cash value, not replacement costs, and instead you needed $500,000 to rebuild. Your policy only gives you $200,000. You're out now $300,000. You thought the damage was $200,000. The adjuster comes out, discovers the damage is $500,000. You have an actual cash value policy. You have a big, beautiful clubhouse. It's not replacement cost, and you're out of pocket $300,000 because it's being depreciated. What do? You're not fully covered. What do you do then? When was the last time you had your policy reviewed? When was the last time you talked to your agent? When was the last time your agent talked to you? That's a big problem. So we're going to talk about number one, what is commercial property insurance? How does it work? What are the parts of it, right? So your buildings, specific to your club, to your course, to your club, your buildings. That's your pro shop, your maintenance shed, your pool, your tennis courts, right? The course itself. So, the greens, the fairways, the roughs, right? All of that, right? That's all part of the buildings. Your property inside of your building. So your desk, your chairs, your tables, anything which can be removed from the building, right? That's part of the property. And then thirdly, loss of use. So if you had that fire and your business couldn't operate, the carrier will give you money in place of that loss of income. That limit is really important, right? The limit on your policy is really important. How much is on your policy? How much do you need? Well, you got to go over that with your agent. How much do you really need? How much is important? What's your break-even number? What's the number you got to have to operate? Well, that's why you talk to an agent. That's why you review it. That's why you discuss it with your board or with your employees, with your financial guy, with your bookkeeper, right? Here's the kicker, right? Here's the thing you got to keep in mind. All those things, you want to make sure you got to have replacement cost coverage. You want to know that if I have a $5,000 deductible and I have $1 million in coverage in my building, $200,000 in coverage on my maintenance, and $1 million for my course, and $100,000 in my pool, and $100,000 in my tennis courts, I'm only paying $5,000 because that's my deductible. That's it. I don't have to worry about actual cash value where I'm paying way more than my deductible, right? I'm going to get depreciated, and it could be a $20, $30, $40, $50, $50, $60, $80, $90,000 loss because it's being depreciated. And if you're an older club or building, you're getting really depreciated because it's older, right? It's the value of it, even if it's been updated, is still less, right? And so the importance of that is crucial, right? Co-insurance. This is almost as important as replacement cost. If you are underinsured, your insurer, your carrier, will only pay a percentage of the claim, right? That is what co-insurance is, even for small losses, which is why it's so vital to be properly insured, right? To be 100% insured to value. If I know it costs $1 million to replace my clubhouse, I can't insure for $800,000 and know I'm coming out of pocket $200,000 and I'm okay with that. Can't do that because the carrier knows I'm purposely underinsuring my building, right? Can't do that. Ordinance of law, right? Code changes all the time. The carrier will pay to make sure your building is getting upgraded to code, being brought up to code. When a claim happens, damage, it'll bring it up to code, right? So you're not coming out of pocket, right? These are coverages that would be and should be included in your policy. Let's talk about, some real life claims. That lightning hit the clubhouse, right? With replacement cost, that $500,000 claim, you have a $5,000 deductible, all you're paying is $5,000. That's what replacement cost is there for, right? You got ordinance and law, you'd have your loss of use to help you get loss of business income, you have replacement cost coverage, and your $5,000 deductible. That's it, right? That's the purpose of the coverage, right? Our tornado took off your maintenance building, and that's $100,000 to replace that roof. It's a big maintenance building. Well, again, if you have the right replacement cost coverage and the correct coverage in place, you would only come out of your deductible. However, if you have exclusions on it, if you don't have the right coverage for your equipment, so all of your mowers, all of your equipment you do every day to, take care of the course, take care of all the grass, well, those need to be insured separately, right? On what's called inland marine, right? You got to make sure that's insured properly. You have your building properly insured, got to make sure your equipment's insured too. If it's done properly, all you're coming out is your deductible. That's how your coverage works. Let's say someone jumps the fence, right? And they go to your maintenance shed, right? Or they jump the fence and they break into your cart barn and they steal a bunch of carts and they destroy some of your cores. Or they break into your cart barn and they take some batteries, right? Or they break into your pro shop and they steal golf equipment, right? Well, with the right coverage in place for your business personal property, and that's you have the right level of coverage, all you're paying is your deductible, and then you're going to get the rest of your equipment replaced, right? But having that policy reviewed, having the right coverage in place is so important, right? That's why you review your policy. That's why you go over it to make sure it's properly in place. How much, do you need? What are the coverage limits? How do you know? Well, again, to be repetitive, right? It's why you talk to your agent, right? It's why your agent does replacement cost estimators, right? It's why you ask for updated, right, scheduled like actual spreadsheets of all of your equipment. It's why you ask for these things and you make sure they're updated. You ask for an inventory. You get these things updated as often as possible. Normally you do it annually at renewal, and you get them done, right, to make sure that it's there. And as things change, you just ask to be communicated with so that you can, get it on there. Some right endorsements. Outdoor property, right, inland marine, the replacement costs, like I just talked about. Ordinance and law, like I just talked about. All these are key endorsements so that in the event of a claim, with the right, coverage levels, you're properly insured. Now, let's talk about some common exclusions, again, that we see a lot that we shouldn't, but could be on your policy. Earth movement, right? Earthquake. We don't see that a lot here in Georgia. It is on policies. Whether or not that should be included, that's completely up, to the named insured. Does not happen a lot, but again, it is an exclusion that's on your policy, right? Water damage. It should never be excluded. That should always be included on your policy. Always. Water and sewer backup. We see it all the time. Should always be included on your policy. That is separate from water damage. Water and sewer backup is water or sewage backing up into your buildings through your sink or through your toilet. Always has to be included. Cyber attacks. If there's damage to your property from cyber attacks, right? If you have cyber coverage, that will be also applicable to your property. If there's any kind of maintenance related exclusions, it comes to kind of wear and tear things. Again, those are exclusions that are going to be there on your property, okay? Because wear and tear is not something that's applicable to property. Wear and tear happens, right? That's not storm related or theft or fire or water damage. Wear and tear happens, okay? How do we fix this problem? Right? How do we stay proactive? Speak to your agent. Look at your policy. Read your policy. Look at the limits. Annual reviews. Know what's going on with your insurance. This is why you have an agent. Agents who know what they're doing can look at this and can quickly help you. Check your co-insurance clause. That matters. It will be on your policy and you will see it. And if it's on there, you need to make sure you're properly insured. Ask about the endorsements. Make sure it's on there. Document everything. Spreadsheets, inventory, document everything. Make sure you have copies of it. Send it to your agent so that they can put it somewhere on their server as well so that they have a copy of it. Don't wait for something to happen. Be proactive. Check out the link in the description or give us a call. Please subscribe to this series. Our number 404-981-1519. Next up is going to be some information about workers' compensation. Thanks again for watching. We appreciate it and hope to see you in the next video.